The next company on our radar is BPCL. Let's look at how the stock is doing. It's actually sold off a little bit this morning, down about 0.7%. Now, BPCL, of course, reported Q3 numbers yesterday, and the earnings were slightly below estimates. The gross refining margin came in lower than expected, and there were some inventory losses as well, which the market wasn't expecting, and therefore the disappointment. Plus, there's the issue of under-recoveries in the LPG segment. So what's the way forward? Well, we have with us Mr. G Krishnakumar, Chairman and Managing Director at BPCL, joining in. Mr. Kumar, thank you so much for being with us this morning, sir. Sir, before we dive into your performance and the earnings, I want to ask the other bigger question, the whole geopolitical question, which everyone's trying to understand. These sanctions on Russian entities, Russian ships, Russian oil companies, do they limit our capacity to buy oil from Russia in any way? And the minister, I think just yesterday, made the statement that yes, India's imports from US, crude oil imports, could perhaps increase. And that's, we're in a very dynamically changing world order when it comes to the oil markets. So that first, and whether this change in the mix is going to impact your operations in terms of crude between Russia, Saudi, and maybe more from the US now.
Thank you for having me on the show. It's very early days. Actually, we are assessing the situation on the impact of the Russian sanctions. But having said that, we can be very clear, there will be a slight short-term impact for about a month or two. But we are looking at rebalancing the whole crude purchase. We will look at more of Middle East crude and the US. And with Mr. Trump saying that he's going to free the energy and there's going to be a lot of drilling, I don't think there will be a shortage of crude in the near term. But there will be a slight premium we'll have to pay, and that we can always rebalance. And over the year, it will balance out. So and in the short term, yes, there will be some cargoes which will be, there will be shortages of some cargoes because of the shipping will be a problem. But over the next 2 months, I think that all that will be sorted out.
So when you say that eventually we'll have to move, we'll have to source more from Saudi Arabia in the short term and maybe more from the US, and you say that will come at a premium, can you just tell us, roughly speaking, what is the higher premium? Because, just logistics, right? The shipping costs, I'm imagining for starters, is going to be much higher, getting in that oil from the US.
There are two things, okay? One is that right now we are in the spot market. We don't have a term agreement as yet with any of these guys. So because there will be an upside because of the sanction. The premium will be around the range of, we hope, around the range of $2 or $3. But we are looking at also delivered supplies from different countries. So that should eventually eventually pan out the numbers. Initially, there will be a difference of about $2, but I think that will pan out.
Okay. Hi, good morning, sir. If you could help us out with crude being sourced for Russia as a percentage of your mix, what is it roughly?
So far, it was about 35% of our mix was from Russia. And 35%. The rest, 35%.
Okay, all right, interesting. I ask you this in the backdrop that the last quarter's GRM was a little lower than what the street was working with. So could you give us a rationale behind that? Because it came in at around 5.6. The GRM, sir. The GRM came in.
If you look at the Q2 GRM, it was about 4.41, and Q3 Indeed. Actually we have done better. We have actually done better at 5.60. The whole situation was very volatile. If you look at, there were tightening of the Russian crude, tightening Correct. Of the discounts, and also we had our planned shutdown programs in Kochi and Bombay refineries. This Correct. Slightly, and moreover, the cracks were lower comparatively. So all put together, there was a tightness in the whole situation. But having said that, we've still done better than Q2. And Correct, going forward, we are very confident that our refineries will perform well. If you look at it, last whole year, our GRMs were best among the industries.
Yeah, that's right, sir. I'm taking that point on board, and you've given me rationale because the GRM improved on a quarter-to-quarter basis, which is good. But only in comparison to what the market was estimating, it was a little bit lower. But as you're putting those points, that because of a couple of reasons, it was lower. What's the trajectory with regard to GRM from here on? If you could help us out with the number.
We should end the year because the next 2 months are going to be a little tricky, because we don't know how the crude will actually pan out, though we feel that there won't be much of an impact. There'll be an immediate rebalancing of crude. We hope to be around 6.5 barrel per barrel.
Okay, all right. And
that's our estimate.
All right, fair enough. So $6.50 per barrel is the GRM estimate for you, right, Mr. Kumar? Good morning, sir.
Yes.
With regards to these LPG under-recoveries, Mr. Kumar, could you give us a sense of what would you expect on that front? What's the quantum for BPCL, and will this come in by March?
See, we are very hopeful. Last year, the government had supported us with a subsidy of about 5,000 crores. And we are very hopeful that this year too, they will support us in time. So we do not know exactly when it will come, but we are hopeful that it will come by March.
And what is the under-recovery for BPCL so far?
It's about 7,200 odd crores, which you put also on the screen, but that's the kind of numbers for LPG just now.
And you think you would be compensated to the full extent, or I mean, any signal from the government in that sense?
I'm not sure it will be the full extent. As much as possible, I think they will give us. The rest we'll have to take it.
Sir, there is this talk about an IPO of an entity where you're one of the joint venture partners. This Maharashtra Natural Gas, and there are large distributor in Pune, I believe. Any updates on this? I mean, have the JV partners discussed this? What are the timelines?
See, we have a joint venture with GAIL India for MNGL. We have, as our board has approved the proposal. As you understand, that both the joint venture partners have to get their approvals in the board, and then we have to get the approval of DPAM. That is the standard process for doing an IPO. So we've got our approval. We hope GAIL will also be done. So probably in the next 4 to 5 months, this should be through.
Okay.
Mr. Kumar, another point which some are a little worried about is what you've announced in terms of new projects, right? There is one petchem 2 million ton plus petchem project in Bina, another one in Kochi. Are all these on track, sir? And if you could just talk us through what are timelines looking like here?
Yeah, okay. So we have two projects. We've announced two projects. One is at a 2 million ethylene cracker plant at Bina, along with the expansion from 7.8 million metric ton of the refinery to 11 million metric tons. We have a project size of about 48,000 crore, that includes GST component. That's expected to be commissioned by May of 28, and that's on track so far. Okay, and we have just done a financial closure with SBI as the lead banker and a consortium of banks for about 31,800 crores. The financial closure is done, and we are very confident of this being on track. The feed and the engineering part of the component is over. The licenses have been selected. So we are now looking at a closure. Our execution is our strongest focus right now. Likewise, in Kochi, a 5,000 crore polypropylene plant is being commissioned. We are very confident of that project coming before time. We are expected that to be sometime in July of 27. We're expecting now closure around April of 27.
And finally, sir, I think the marketing side of the business has done really well, right? Marketing margins have been quite good. And we've seen crude oil prices come down, and now there's talk of lesser wars in the world and more crude oil, more drilling in the US. So maybe crude remains benign. Can you leave us with an expectation on the marketing side of the business? What level of margin are you at? Where will it sustain? And I don't know, I mean, as a consumer, we can only ask, if crude comes down further, would you be passing that on to the customer, or would you be retaining some of the margin cushion?
We'll have to look at it as and when the crude moves up or down. But we are very confident on marketing. We're one of the strongest networks in the country. We have about 22,000 stations outlet. We're coming out with a bouquet of energy stations where, apart from petrol and diesel, we'll also be offering CNG and EV chargings. And along with EV charging, we have come with a new proposition in few select outlets now, which was on a pilot basis called B Cafe, where we have created a very good experiential coffee station where when the person's charge the EV, which is about 20 to 25 minutes, even if a two-wheeler, he'll have to charge for 20 to 25 minutes, he can be engaged in this coffee shop. And this coffee shop is entirely sourced by BPCL. We have not taken any outside help. So and that's called branded as B Cafe. You can see on some of the highways.
Oh.
So this is, and we're very confident that marketing will do very well in the years to come.
I can't wait to try coffee at one of these B cafes, sir. As a self-confessed coffee lover, sounds like a very interesting and exciting proposition. So we look forward to experiencing some of that. Thank you so much for joining us and giving us a well-rounded view on all parts of your business. Thanks very much for joining in.
Thank you so much.
Okay, thank you.